Here with this week's hottest stories in the investment world, this is Zach's Friday Finish Line.
Hello, and welcome to the Zach's Friday Finish Line. I'm Ryan McQueenie, a content writer here at Zach's, along with one of our editors, Maddy Johnson.
Today is Friday, May 5th, and we're here to recap this week's biggest stories in the investment and financial world.
So arguably the biggest story of the week is the House of Representatives' decision to narrowly approve a bill to repeal and replace major parts of the Affordable Care Act on Thursday, the new law being dubbed the American Health Care Act, I think 217 to 213.
Yeah, Part Duh.
Part Duh.
Yeah.
I like that.
American Health Care Act, Part Duh, because the first edition
didn't even make it to voting. I like that. Cool.
Yeah. So the vote passed on President Trump's 105th day in office, and it kept alive the unwavering Republican dream to undo former President Obama's signature legislative achievement, the Affordable Care Act, Obamacare. But this new version of the American Health Care Act must now enter the Senate arena. It's just like a game.
Yeah.
It's like a bloody game.
Oh,
and this fight will surely be even bloodier than this fight was.
Yeah, I was going to say, if you thought we've even seen the half of it yet. Paul Ryan, right before, he was the last person to speak before the vote on Thursday afternoon, saying that a lot of you, speaking to his fellow Republicans, have spent 7 years waiting to cast this vote. So a monumental day for the GOP.
Definitely.
We will see what makes it out of the Senate, if anything. Not sure exactly if this bill will pass, but it almost certainly won't in its current format. As the Senate likes to do their own revisions to things.
Looking at you, Mitch
But
McConnell.
they had quite the part. They were busing Republicans immediately from Capitol Hill to the White House. They had ordered cases of beer to celebrate with President Trump. It was quite the spectacle in D.C. And if you were watching the live stream of the proceedings, the House Democrats started singing "Hey, hey, goodbye" to
Really?
some of their Republican colleagues on the other side of the aisle, as I think the Democratic Party will be using this as a weapon heading into the midterms in 2018. So.
Definitely. You mean the song from Remember the Titans?
Yes. Well,
I mean, it's featured in Remember the Titans, and it's not from Remember the Titans.
Right, but best known probably for... Well, I don't even know if that's true, but Remember the Titans, great film.
Great film. Denzel Washington, classic actor. Anyways, this week also continued with more Q1 earnings heavy hitters, including the last of the Silicon Valley tech giants, which we'll be covering in depth in just a moment. And we'll also look at the latest developments in live video streaming from some of our favorite video platforms.
Yes, and excited for that conversation later on in the show. First, we're going to start with Apple, though. Apple released its second quarter 2017 financial results on Tuesday, posting beats on both the top and bottom lines. Earnings came in at $2.10 a share. That beat our Zach's consensus estimate of $2.02 per share. Revenues came in at $52.896 billion, edging out our revenue estimate as well. Our consensus estimate had called for revenues of $52.6 billion. The real story here, as is the case with most Apple reports, iPhone sales. Apple said that it sold 50.8 million iPhones in the second quarter. This was a slight drop, a 1% drop from the year-ago quarter. It also came in short of our consensus estimate, which called for unit sales of 51.2 million. Services, though, this has been the new one, to the new kind of business segment to take a look at. This includes Apple TV, Apple Care, Apple Pay, Apple Music, Apple everything. No. So it grew 18% to $7.041 billion. Obviously, though, their iPhone still accounts for about 60% of company revenue. So when that lags, investors tend to react based on that. Gross margin was 38.9%. This was down 50 basis points from the year ago quarter. Operating expenses increased 9.4% to $6.5 billion. This was due to higher research and development expenses, as well as selling, general and administrative expenses. And this caused operating margin to plunge 100 basis points. I will say, not to speculate a little bit here.
Not to speculate, but to also
I'm
speculate.
going to speculate wildly. Higher research and development expenses on self-driving cars, perhaps? I'm thinking exactly so.
Thinking back to that Lexus spotted on that one road. Do you know what picture I'm talking about?
I don't know. Do I know?
Apple self-driving car? The Lexus with the outfitted with the technology?
Oh,
that
sure. Yeah.
Yeah. You know,
Yeah. What was it called? Project Titan, was that?
Project Titan. Yeah.
I don't know if they're calling. I don't think they're calling it that anymore because it's kind of like secrets out. But
Cat's out of the bag.
Anyway, so Apple also provided guidance for its fiscal third quarter. Apple's on one of those weird fiscal schedule, guys. It's all about them, isn't it? Oh, I just cracked myself up. Anyway, so for the current quarter, the company now expects revenue between $43.5 billion and $45.5 billion. This was kind of on the low end of our consensus estimate, which sat at $45.05 billion at the time of the report. So a lot to digest there for Apple. I will also say China sales continued to fall off a cliff, while on the other hand, Tim Cook in the earnings conference call said that they saw double-digit growth in India and credited the development of that country's 4G infrastructure to better success in that region. So
nice.
From one massive market to the next.
Yeah. So speaking of massive markets, on to Facebook. Facebook released its first quarter fiscal 2017 results on Wednesday, and they also beat top and bottom line estimates. Diluted earnings were $1.04 per share, while revenues came in at $7.849 billion. Net income was $3.064 billion, and this was up 76% from the first quarter of 2016. Reported daily active users, or DAUs,
DAUs, as I like to call it,
of 1.28 billion on average for the first quarter, an increase of 18% year over year. And monthly active users are 1.94 billion, and this gained 17% year over year. So decent growth, double-digit growth, still pretty typical for Facebook.
That's about a quarter of the people on Earth, by the way.
Mobile advertising revenue reflected roughly 85% of total advertising revenue for the first quarter from Facebook, up from approximately 82% of ad revenue in the prior year period. So looking ahead, GAAP expenses are projected to increase between 40 to 50%. And the company expects 2017 to be a year of aggressive investments. So Facebook plans to build more data centers as well as recruit more engineers to fuel its artificial intelligence, AI, and augmented reality and virtual reality, AR, VR technology ambitions. So solid quarter from Facebook, what we expected.
Speaking of an ambitious tech company, Tesla also reported this week. We've called it a tech company on wheels.
Yes, we have.
In the show before. So Tesla reported first quarter results on Wednesday. And what can you say about Tesla? We have to kind of approach it a different way than we approach all the other reports.
That's true.
Because they play by their own rules, and the stock plays by its own rules. So earnings came in at a loss of $1.97 per share. This excluded 7 cents from non-recurring items, and it missed the Zacks consensus estimate that called for a loss of 67 cents per share. Revenue figures were about $2.7 billion. This did surpass our consensus estimate of $2.56 billion. Gross margin in the quarter was 24.8%. In the adjusted automotive gross margin, so in the car section of the company, margin was 27.8%. This was up 560 basis points from the fourth quarter. This is due to improved average transaction prices and manufacturing efficiency. Vehicle production increased by 64% compared to a year ago, and they set a new quarterly record of 25,000 51 deliveries. Yeah, we could applaud that. Yeah, we can do that. I'll say this was the first full quarter of Solar City being in.
Oh, yeah.
So if you noticed that energy and storage, I believe, is this how they define the whole segment, that revenue was up significantly because they bought an energy and energy storage company. So that's
because
how that works.
Tesla wants to be this energy efficient conglomerate. So energy efficient cars, energy efficient homes, just energy efficiency in just everything.
Yeah. And also Elon Musk really likes to do this thing where he keeps the same people around him at all times. So his cousin was the CEO of Solar City. He was he was on the board.
So it's a little
keeping it in the family.
Keeping it in the family.
I'm sure that their parents are very proud.
Yeah.
I actually have no idea. I don't want to speculate on that. Something we don't talk about enough. Really important chief executives' parents and how they were raised. Anyway, so operating expenses in the energy and energy storage segment were up, obviously, Solar City, but vehicle-related operating expenses increased only 8% sequentially, despite a significant Model 3 vehicle development progress. And that's really all that anybody cares about in this whole report is, yes, confirmed, the Model 3 is still on track to begin production in July. There was a really interesting piece of the report that I saw where they wanted to clarify that there was the rhetoric out there in the media that the Model 3 was like the next best Tesla car. And they wanted to say, no, the Model S is always going to be our better version. Yeah, our flagship, if you will. So Model 3 is the cheaper version. So be on note of that. But that's all anyone wants to talk about is the Model 3 is coming out in July. Yay, we don't even care that they missed earnings by $1.30. We're just the car that they've been telling us is on track to begin production in July is still on track to begin production in July. So that's a wonderful thing for Tesla. We'll see what happens from there.
Definitely. All right. So lots of video streaming news.
Big week for
video streaming news this week.
Big week to be a live streamer.
So in the midst of all these earnings, there was a lot of developments in this burgeoning sector, if you will. So Twitter, on the heels of a pretty decent earnings report, they announced on Monday that it will partner with Bloomberg to provide 24/7 live streaming video content. And the content will be exclusively for Twitter and cover the financial news outlet Bloomberg, pretty respected throughout the industry.
Definitely.
Twitter's Bloomberg news coverage will feature live reporting from the company's worldwide news network. And the streaming deal is also said to include a mixture of verified videos posted by Twitter users. I think this is really good for them. So moving from sports to news seems like a pretty good segue for live video.
Definitely. I think makes a ton of sense, and I would say maybe a little bit marginally more sense than sports live streaming. Not to say that Twitter is not an excellent platform for keeping up for sports. It is. It has completely revolutionized the way that sports teams interact with their fans and the way that we consume highlights. But more so than that, Twitter has really revolutionized the way that we interact with news.
Definitely.
And so this seems like a good fit. Again, though, and this is the same thing with the NFL deal from last year, is are people actually going to use it at all?
I don't know.
They're certainly hoping so. And to kind of move on to the next bit of news here, almost a new competitor in the sphere now, but this live streaming is 24/7. Live streaming is certainly Twitter's vision for...
It's definitely its realm.
Yeah. It's their vision. There's another big social media company out there with a different vision, and that's Snap, and the makers of Snapchat, of course. So they also had their news this week for a different vision.
Yeah, which I feel like I should have seen this coming, but I didn't.
Sense, yeah.
So they apparently have several deals in place with major media companies to deliver content for this new live TV concept of theirs. So the company inked deals with Comcast, NBC Universal, Disney's ABC, A&E, Discovery, and the NFL, and potentially even CBS, 21st Century Fox, and Scripps Network Interactive. So This company is quickly putting together an impressive lineup for its new television-like platform for Snapchat, its popular disappearing picture messaging application. I'm assuming this type of live TV thing is going to be part of Stories. The new idea will feature 3 to 5 minute shows made exclusively for the app.
So, yeah, it's really interesting. And that's why I wanted to kind of highlight the fact that Twitter has a very specific vision for this new media content and this new media outlet, whereas Snaps is very clearly a different vision, but still on the same time, kind of perhaps the first time that we could consider Twitter and Snapchat kind of direct competitors. Now, it's still different, and I think the microblogging platform of Twitter was always different enough from the picture messaging platform of Snapchat that they weren't considered direct competitors. But now that they're kind of shifting to a new focus on media,
definitely,
and especially original content, they're kind of now maybe playing the same game. Of course, as I've said, now 2 completely different visions.
Yeah.
And I like this also for Snapchat a lot. I think this 3 to 5 minute exclusive content with the biggest names in media, banking off of already popular TV shows, already popular channels that have fans. You're adding something new to that fandom's experience. So I like the idea.
Yeah. I mean, we talked earlier. I mean, Shark Week is a huge advantage. It's a huge thing for Discovery Channel.
Give me Shark Week.
Everyone loves Shark Week.
Yeah.
I mean, Snapchat should definitely jump on that bandwagon. But the thing is with Snap and Snapchat is this content is curated. So I think that's the difference between the content developed for Twitter and the content developed for Snap potentially is the curation aspect of it, where for Snapchat, the stories are going to be written, it's going to be developed, it's going to be carefully curated, stuff like that. Where Twitter, it's live, it's right off the bat, it's
Bloomberg. It's whatever.
Bloomberg. It's going to be
what we expect to see from Bloomberg.
Yeah. And I think that it's going to be something that's going to help set the two apart. And still keep them, while direct competitors, you're exactly right, still keep them slightly separated.
Yeah, and I will say that as well, to bring in Facebook, obviously the social media behemoth and the outright leader in the social media sphere. I think the prevailing theory from investors post-Snapchat IPO and post-Facebook copying everything Snapchat was doing, obviously using some hyperbole there, but we now see on all of the Facebook-owned entities a version of Snapchat's stories idea. Instagram, Facebook Messenger, the regular Facebook app, WhatsApp, all have incorporated this like disappearing story with cool picture overlays and whatnot. And so I think the prevailing theory from investors was, okay, if Snapchat's going to continue to compete and be taken seriously, it's going to have to, excuse my use of a already popularized term here, but make Snapchat cool again and make Snapchat unique again, and having it be a place where people can engage with their favorite shows seems like a method of doing that. So cool idea. I'm interested to see what comes out of it specifically. Moving on, though, to our next cool idea. Cannot leave Hulu out of the conversation this week.
No, and Hulu finally launched its like beta test of its live streaming service this week.
A public beta, as they
public beta. Yeah, I think it's available for its Android devices. It's not available for Roku, which sucks because I have Roku. But anyways, it's $39.99 a month, and it includes more than 50 live TV channels: ABC, ESPN, Fox News, FX, all the big ones, USA, A&E. And for $4 more a month, $43.99 a month, viewers can also watch those on-demand programs free without commercial interruptions.
That's the easiest $4 I've ever spent in my entire life.
This is huge.
Big time.
This is so exciting. Like, I'm 100% interested right now.
For those that don't know...
And I'm already a Hulu subscriber.
Yeah. I was just going to say, though, for those who don't know what Hulu is or don't use Hulu, Hulu has kind of made a name for itself as a place you can go to watch TV, current episodes of TV for free.
A day later.
Right, the next day. So it was a definite viable cord-cutting option, but
100%.
wasn't necessarily a way that you could be on top of things as they were happening. It was the next day kind of thing. And then you had the commercials too. So
right.
For $43.99 a month, commercial free, favorite channels, 50 channels, all channels I'm watching, all channels that have shows I love on them. I mean,
and this is to catch up
point me
on
to a cable package that is gonna
all
give
your
me that.
network television shows that you're going to lose if you cut that cord.
Mm-hmm. So yeah, I mean, just point me to a local cable.
And I mean, with
package.
Hulu, you can add on for another $9 a month. You can add on Showtime.
Mm-hmm.
I don't know what other premium channels you can add on through Hulu.
Well, they have their exclusives.
They had their exclusives. They have
content as well.
they have The Handmaid's Tale, which it's amazing.
I've heard it's good.
They have they have The Path. I mean, they have a million movies now you can watch. It's
awesome.
Mind blowing how much this service has grown from just 2 years ago.
I agree with that for sure. Definitely some really impressive growth at Hulu, and
it is sorry to interrupt, but it's a partnership between Disney, between Comcast, and 2 other media entities.
I think like the Hulu is owned by those companies.
Yes, Hulu is owned by them.
Right,
Yeah.
right.
So that's where they get the rights to all of this great content.
So a little maybe competitive advantage for the licensing of things there.
Right.
Definitely. All right. Well, a big week for live streaming, for cord cutting, for being a next generation media consumer. It's not the next generation anymore. It's here. These are our options, and they are increasing on a weekly basis. It seems like some really, really interesting stuff there. And I can't wait for the Twitter and Snap features to debut and get my hands on them. I think that just about does it for us this week. If we missed anything, or if you would like us to cover another story, you can always email us at podcast@zax.com. You can also check out all of our other exclusive audio content at zax.com/podcast. Subscribe, leave us a rating on Apple Podcasts if you enjoyed the show. Thank you for joining us, and we will see you next week.